Hang Seng has opened with a positive bias, trading with close to gains of 0.7%.
The allegations are being answered by her and by her husband, I think, also.
Yes.
Both of them together are defending themselves.
The company has launched the fundraising process both to raise funds via both the QIP route as well as a certain proportion of funds will be raised by the compulsory convertible debentures route.
Surely positive view coming in for Ola Electric from BofA as well as from Goldman Sachs.
So 25,394, 395 is where the Nifty is starting.
Recovery will be there. I think it will be gradual. It will not be back to double-digit growths of the past very quickly.
We aspire to be the largest jewelry player in India.
The Nifty definitely has recovered from the lows and it's up around 60 points from the lows of the day.
The fact that the current number is lower than the previous month indicates probably the impact of Chinese disinflation.
Bajaj Auto has launched its new Triumph Speed T4, basically a Speed 400.
Aam Aadmi Party has announced that Atishi will now be the new Chief Minister of Delhi.
A day of consolidation. We've been very steady today, 40 points higher on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far, and it has been a quieter kind of a day through just basically a drift. The drift is higher, that's the good part. But otherwise, not very much on the indices. Again, very, very stock specific. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surbhi. Surbhi, hi.
Hi, Prashant. I think you said it. Quiet day in the market.
Yeah.
Not so quiet outside on the streets because the chants are, I think, picking up. The drums are beginning to roll because Mumbai's, favorite god, dare I say, is going to be making his way off. There we go. We've got the visuals in. Some of the biggest idols of the city. I'm not sure if that one is Lal Bagh Cha Raja.
That looks like...
That is, I think, yeah.
That is absolutely grand. Yeah, that is Lal Bagh Cha Raja. So that's Baikala, which is not very far away from where we are right now. But the scenes are very, very, of course, vibrant, and it's just going to be a full-on... I don't know if we can up the audio a little bit and get you the ambience there, because it's festive and it's going to be quite amazing to witness one of these. And this is going to be, of course, the entire procession will last many hours, and late in the night, and it'll finally reach the ocean and the Marine Drive spot where the idol is then let into the sea, and so those are annual scenes on Ganpati Visarjan Day. So
absolutely. And while of course idols like this one, Lal Bagh Cha Raja, are among the most celebrated, even some of the smaller pandals, when they have some magnificent idols. I remember spotting a very large one at a very small pandal in Fort, not with the big name, but of course with great fanfare and fervor. So it is the city's favorite god, and Mumbai getting ready to bid adieu. Yep. But back to the screen, it seems that the action is a little quiet. Maybe dealing rooms are also gearing up for the long ride back home. But I think it's been a consolidation, but not too much loss. So the bias being positive.
No, it's just a gentle drift higher, right? And it is just a drift. That's it. So for the Nifty, we are very, very close to the 25,475 mark, which is where I think resistance should start to come in. Unless, this Fed meeting is like that fillip or the impetus for another leg higher. So we are at 25,426 already. 475 is that number. The ending diagonal is there. And for the Nifty bank, targets are 52,550. Again, there also there's about a 0.15% kind of a gain. So it's a drift up. And that's a 17.6% retracement to the fall. So while the Nifty is pushing to new highs, the Bank Nifty is just about getting its work done and getting into position to kind of leap to its previous all-time high. It's not done it so far. Broader markets are flat. Advanced decline, it was actually quite starkly negative. That is picked up a little bit, but still more stocks are down as compared to stocks which are higher right now. Surbhi.
Absolutely. And on the large cap screen, actually, two stocks really stand out. Both are from the two-wheeler space, Bajaj Auto and Hero Moto. Hero Moto is now pushing a 3% gain. So on a quiet day, this one really stands out, and you really can't miss it. That's the other one, it's Peer. So Bajaj and Hero doing really well. There's Bharti, which is seeing consistent buying, about 1.5% higher. And today we've seen some interesting block trades. On Tata Motors, the trade happened right in the morning and the stock was down, right since then. It's not changed even now, still down about 1.5%. And we've just seen a big block trade on Trent as well, another Tata Group company that just happened as we were kicking off the show. About 11 lakh shares traded, and Trent has been, managing a bit of an up move as well. But I want to quickly point out some movers and shakers from the broader screen. I mean, it's been all about recent listings, and even the one that we had today really listed in style, glittering style, might I add. PN Gadgil has been retaining a bulk of that 60-70% pop that we had at the open, 800 rupees on that stock. Bajaj Housing, second day running a very, very strong show. Today we had a note from Phillip Capital on this one today. They put out a buy with the target price of 210. The stock's inching towards that level. And Ola Electric, electrified all over again after several weekdays for the stock. Two positive brokerage reports which have led to this move on Ola Electric, and we'll get to them as we go along in the show. Chemicals is a spot which has seen a lot of green today. Himadri Chemicals, Sumitomo, Neogen, Sudarshan, all these stocks are flying between 5 and 10%. So we'll talk about this. And some more movers, Zaggle, Mrs. Bector's, both on the way up. And Suzlon, interesting. Suzlon's been one of the biggest wealth creators, this year. Today there's some profit taking on decent volumes on Suzlon. It's down about 3 to 4%. So some movers and shakers that stand out. But let's get started and talk about some trades that you can consider. We have with us Mitesh joining in with exactly that. Mitesh, good afternoon. So tell us, index or stocks, what are you looking at for the last hour?
So I think on the markets, basically we've failed to sustain at higher levels. I was hoping the 25,500 on the Nifty will be crossed. But as of yet, I think that's not happened, and the bank Nifty is cooled off. My sense is that there could be a pullback to the earlier highs on the Nifty before we move up further, which means that there could be a chance of testing 25,300, 280 zones, and then we move up again. So for the time being, not trading the index, but trying to trade the markets on a stock-specific basis. I have a buy on Bosch with a stop at 34,200 for targets of around 35,500 to begin with, and then we may even look at eventually higher levels. And Chambal Fertilizers is a buy for a target of around 534 and keep a stop below 513.
Okay, all right. Got it, Mitesh. Thanks very much. We'll come back to you with some more questions in just a bit. But let's get started with some of those active stocks that are catching the limelight today. And Ola, as we just told you, is definitely one of them. Stocks up 10% after several weekdays. Whole listing, big move up, the big pop, and then the profit taking, which took the stock down to about 104. And now we see two brokerage notes, which have caused this flutter on the stock today. Vinny is with us to tell us more about it. Vinny, what are these brokerage reports saying?
So this time we have a thumbs up coming in from both these brokerages, that is BofA as well as Goldman Sachs. Now BofA, firstly, let's talk about that. Target price of 145 rupees per share, initiating coverage with a buy rating. And what they believe that Ola actually has a right to win. They are in the leadership position. Market share is quite high in the electric two-vehicle space in India. That will work out well for Ola Electric, and that is why 145 rupees is the target price that they gave. So clearly an upside of 40 to 50% from yesterday's closing price that we look at it. Today, obviously, the stock has already seen a bit of a run up. Moving on, we also have Goldman Sachs. The target price that they've given is 160 rupees per share. They believe that Ola will actually reach that EBITDA break-even point by FY27. Expect revenues to see a growth of almost more than 40% on a compounded annual basis. That's CAGR basis of from FY24 to FY30. And overall, they believe the return on investments also could see a very good improvement there. EBITDA margins, something they're watching out for, and leadership for Ola Electric is not a concern in the India's two electric vehicle space, which is absolutely seeing a very sharp growth. So key positives there for Ola Electric.
Okay, got it, Vinny. Thank you very much for a heads up on what those brokers are saying, why they're optimistic on Ola Electric. Deepak Shenoy is our first guest on the show this afternoon. Deepak, great to have you on as usual. Not sure about the fanfare in terms of Ganpati in Bengaluru. It is a big festival in Karnataka as well, I know that. So tell us about that, and then we'll get to Ola. I want to know whether you are willing to ride this one or not.
So, Survi, of course, Ganpati is big everywhere, I think. But, of course, Bombay has a very special attachment. And then, the festivities last longer. In all of Bangalore's lakes, Bangalore has a very large number of lakes. there's a special area carved out for specifically for immersions, so that when people come, they don't kind of put all the idols into the actual lake, but it's a separate area that's created, and it's usually thronged by people in the evening. There are multiple processions happening and so on, but nothing at the scale of Lal Bagh Cha Raja or the GSB Mandal. I think that's the second biggest. That is just a different scale altogether. It's happy festivities to everyone who's celebrating, and of course, it's a big day. I hope everything goes well, and sometimes rain comes and spoils it. Sometimes people say that the rain actually helps it. So all of it is good.
Absolutely. Okay, so let's get to the market and the ride. What about Ola? Very, very interesting debate around the stock. Are you willing to ride it now at around 120?
So it is expensive. It's at 52,000 crores in market cap. Roughly, that's half of Hero MotoCorp's market cap. Hero MotoCorp has like a few million vehicles a year, more than 3 or 4, and you're looking at Ola, which is at 300,000. So it's all about future potential. But it appears at this point that while they have announced, bikes, the bike format, large format, wheels based, so which is useful for bumpier roads and village roads and so on. It's going to take some time before these things see light of day, and then how their networks kind of help in terms of service and support and all that stuff. Right now, they're more concentrated. I would say at this point, we are not very interested given the current prices. We'd like to see some of these new things come to light. It is expensive. You're playing with a bunch of things that are going to come in the future, whether it's the electric cell or whether it is the new format bikes or the expansion of the current smaller bikes. I think we'll wait to see. The first time when we heard of the numbers in August, they weren't very great in terms of sales. I think they had a much lower number in August compared to what was expected from earlier, and they even lost market share. So I think I'll wait until we get something more meaningful from the data front. And if things are going well, we don't mind paying a higher price for this if things are going good. But I think at 52,000 crores, there's not much opportunity left for us.
Okay. Deepak, hi, good afternoon. Have you looked at this company called Zaggle over the last, its recent listing? Phenomenal, it's done very well. And, it's got it does a lot of things, but basically works with corporates and the organized sector in terms of enabling payments and those kind of things, reward programs, etc. It was getting into the trucking side of things as well. The last time we spoke to them in terms of enabling payments for drivers, etc., as they travel the length and breadth of the country. Just your thoughts, if you've tracked it, and what do you make of it? The opportunity size just intuitively seems to be pretty large. Go on.
Yeah, Prashant. So I think in fact, just when you were talking about it earlier, when you were showing the charts, is when I was starting to look at it. So I haven't done much, but then it looks like an interesting company in terms of course, it's a very high, it's like 100 times earnings. But nowadays, that seems to be par for the course for anything. But they have about, I think, 900 odd crores in revenues, and they make only about 59 crores in profit after tax in the last 12 months. So relatively small, low margin business in that context. Therefore, giving it such a high PE would be betting a little bit on either future revenue growth, which can be substantial, or increase in margin profile to the 25-30% ranges, which is when you would justify something like this. I don't see anything right now. Of course, I have to investigate a lot more, but we'll have to see, because the pure payment level services will not be very high. So you'll get something kind of Quest kind of valuations at some level, because you will have some layer of capex on it, and you'll have some layer of you'll have some layer of maintenance capex on everything that you do. But if there's a lot of technology involved, you can reduce it and increase your margins. Till now, we haven't seen any meaningful increase in margins. So I don't think right now I'll wait for that to happen. But to be fair, I've just seen the stock, so I don't have much information. This chart looks very good. That's all I can say.
Yeah, a recent listing, and it did catch the market's fancy. And Zaggle once again today having a good day. Speaking of stocks that are catching the market's fancy, you might want to brush up on the jewelry stocks because we'll come back with a question on today's listing and the whole space. Because Deepak, it's been absolutely phenomenal, right? The way jewelry stocks have simply kept sparkling and moving higher. PN Gadgil is a new kid on the block, and the strong listing has led to the 67% pop, and all the gains are pretty much intact. We have Mangalam joining in with more details on the business and why the market's so upbeat on PN Gadgil. Mangalam.
Well, it was a stellar listing for PN Gadgil indeed, over a 70% listing premium to its issue price of 480 odd rupees. And there were 4 reasons for that. One, there was strong demand for the IPO. Overall subscription was close to 59 times, led by qualified institutional buyers who bid the IPO almost 137 times more than what was asked for. And secondly, in the interim, gold prices continued to rally as well. Gold is at a record high ahead of the FOMC meet. The third part was that in the interim of this IPO, we did see a sharp surge in a lot of these regional jewelry players, the likes of PCJ, Moti Sons, TBZ, all of them rallying anywhere between 30 to 60% in this month itself, notwithstanding gains of 15 to 18% coming in from Kalyan and Senco as well. The company was offered at 42 times trailing and now is trading at around 70 times trailing after this up move that we're seeing. From the commentary that we heard from the management today on our channel, the one that really stood out was that 65% of their gold is unhedged, which implies that with the rally in gold prices, maybe over the next couple of quarters, we will see a large amount of inventory gain coming by as well, 6 months from here on until the company reduces its unhedged exposure to 20% as promised as well. The other thing is that they are looking at margin expansion via increase in studded ratio and revenue expansion via increase in stores itself. When they joined us when the IPO opened, their long-term targets for revenue were close to 10,000 crore with double-digit margins for FY27, 15% of their revenue coming in from studded ratio itself. So you plug some of those numbers and look at forward valuations. Even if the company sees a reduction in their finance costs, increase in margins, and also an element of inventory gains, and the net profit from last year of 154 crores doubles to around 300 odd crores. 1 year forward, the stock is trading at 37 times, which is at a slight premium to Senco, which is currently at around 33 times, and obviously a discount to Titan and Kalyan, which at a much larger scale are trading at valuations of 60 and 52 times respectively.
Okay, Mangalam, got it. Thank you so much for that. So forget choosing jewelry, choosing jeweler stocks has become even more interesting and slightly difficult given the price rise. That's PN Gadgil. Let's put up the others as well, because the 1 year journey for most of these stocks have been absolutely breathtaking. Many have doubled, some have tripled. This is today. Let's pull up 1 year charts. Kalyan is up over 200%. So that's a trebling that we're talking about in the last 1 year. Senco and TBZ both are between 150 to 160. But let's pull up the graphs, the charts if we can, the 1 year charts. They really tell the story. And even a more recent listing like Moti Sons Jewellers is also up about 150% in just this 1 year alone. So this has been a phenomenal ride. And actually in all this period, Titan itself has not done anything. Titan's up barely 13-14%, so paling in comparison. Deepak, the jewelers, I mean, sure there's demand and sure disposable incomes are higher, but what have you made of literally the gold rush?
That's an interesting aspect here because gold prices have gone up recently. The budget brought gold prices down July 23rd. Prices fell nearly 7 or 8%. So we've only recovered about maybe a little bit more than half that journey down. So it was 73, 74,000. It's come down to, it went down to 68, 69. It's back up to 71, I think, which is where we are today. I would say at this point, one of the problems with this is there will be inventory losses on the books on this quarter of jewelry companies that had a relatively large amount of unhedged inventory, unhedged in India, that is, on their books, because then you will face the 8% loss. Now it's about a 4% loss on your inventories that will probably come into your book and, kind of ruin numbers for this year. So if PN Gadgil is actually one of those which does not hedge its inventory, then you might see some kind of an impact. The other thing is, of course, demand remains strong. So you've got a Dhanteras coming up next month, and demand in India seems to be okay in terms of jewelry itself. But I would say here that there's a lot of expectations of deep rate cuts in the US. And if there's not that much of a deep rate cut in the US, And what will happen is these expectations that are built into relatively gold prices, because gold prices are believed to be a hedge against inflation. If you cut interest rates, inflation will tend to go up. I would say that that belief is short-lived, because the only reason that rate cuts will be done in any country now will be if inflation is under control and going down. So I think both in India and in the US, the rate cuts will kind of be mirrored by inflation being under control or going down. So in the longer term, I actually don't feel that this optimism in gold prices because of rate cuts will sustain too much. In the last cycle, we've seen that gold prices peaked in 2011, and then they started to come down for the next 6 or 7 years, even though interest rates were at an all-time low. So I would say that, contrary to popular belief, a rate cut will actually result in a drop in international gold prices, not an increase in them. So the jewelers will get automatically affected. Some of them won't because they have a brand, but the ones that rely a lot more on the gold prices going up because they relatively keep high inventories, they will suffer. So you have to be careful here. I think brands like Titan and all that will have more of a cushion, but the smaller ones may not.
No, I think that's a good way to sort of put things. So yeah, you got Bajaj Housing Finance, the other one, which is up, which continues to move higher at 181 rupees. And we'll talk more about this in a bit. Ola, of course, we mentioned. Blue Dart is another one, 11-12% higher. 91.80 is where Blue Dart is now sort of trading at. Century Ply is another one of those big movers. It's got about 10%, 880. There is Neogen Chemicals, which is up about 11%. Stocks at 1775. Aarti Surfactants opened up 8% in the morning. It's up 16%. That's a very large move today. There's Avalon, which is up 13%. ADF Foods is up 7%. Sudarshan Chemicals is up 6%. But beyond this, I mean, it's not a humongously large volume day as far as the gainers list is concerned. It's a bit more subdued out there. Panisha Biotech is up 5%, and so on and so forth. So there's a fair bit happening as far as single stocks are concerned, but there are of course more down than the number of stocks which are higher at this stage. Any of the recent, apart from what we've discussed, Deepak, any of the recent listings? Because it looks like, the listing gains is one thing, but after that you get more. So if you've not looked at the IPO before listing, you've got to look at it once it lists and study it, because in some cases it's 30, 40, 50% after listing. But I'm assuming it's a large, the kind of market we're in. But anything you've looked at?
No, we actually, you look at the IPO market, we can't participate because we're a PMS. But what happens after listing is that typically the demand kind of shoulders its way through, right? So you get a Bajaj Finance, or Housing Finance, which is now valued at 8 times book. You don't really value a housing finance company, which has really low interest rates and relatively much lower ROEs, at 8 times book right now. And what are you going to get in the future? It sounds like a little extreme, but I don't think these are sustainable gains. And some of it is also because IPO players can't easily sell their shares. There are some, of course, the retail will be sellers. A SEBI report recently came out and talked about who's tends to be sellers afterwards. It turns out pretty much everybody, including FIIs, tend to be sellers, but they usually have to hold on for a month or so if they're QIB anchor applicants. So there will be volumes that come into the share after a month, and you see this in Ola Electric as well. There was a lot of supply that started to come in immediately after it finished a month. The next move will be after 6 months, when the pre-IPO holders, non-anchor, will also get out of their lock-ins. So I would say, because you get so much supply at a later point in time, some of these IPOs you can actually wait for a quarter or two before you kind of have to make that decision whether you want to buy or not. And eventually, those 2 quarters give you the real financials as well. Although we knew Bajaj Housing Finance's numbers because Bajaj Finance itself was public. As an independent entity, what kind of reserves and what kind of how does it manage its book independently would be only visible after their first conference call and all that stuff. So I think it's better to wait, especially because you have runaway markets like these. And in a place where people are buying stocks on very relatively less information, you're bound to get some people who are more excited, just because the stock is moving rather than because of the really core fundamentals. So there's no harm in waiting for it to die down a little bit and then buy it at a more informative stage. This is just my opinion, and I mean, of course, we have to wait a quarter or at least for one set of results before we buy it, just as a rule. And we'll probably take our decisions at that time. I think right now we have been buying a few companies that have recently listed, including like Kane Semiconductor and so on, but we bought them at least 2 quarters after listing.
Okay, so basically we're going to wait it out, see how the earnings trajectory really shapes up, and then take a call. Got that. A fair approach. Good to have you on the show today, Deepak. Thank you very much for joining in, and we look forward to the next call. Need to take a quick break on that note. We'll come back on the other side, keep tracking the market, and also we'll have with us Dinshaw Irani of Helios Mutual Fund for a perspective on the market.
Okay, welcome back. Well, market's up 30 points. It's a slow drift higher. Things are looking pretty good. Otherwise, I mean, the big talking point, of course, is what happens tomorrow with interest rates, the start of the rate cutting cycle tomorrow. Well, Dinshaw Irani is with us, CEO of Helios Mutual Fund. Dinshaw, good to have you with us here. Thank you very much for your time. Prashant at this side. Dinshaw, just a quick word. Let's just start with that slightly macro-ish take. Which sectors stand to benefit the most here in India if we are about to get 125 basis point rate cuts in the US? And is there through the course of the year, not tomorrow? I mean, by the end of the year. Go on.
I got that. So thank you for having me on your show, Prashant, and a very good afternoon to you and your viewers and your team, of course. So basically, Prashant, the expectation is a 25 bips cut this 18th rather, and then probably in November you'll see another 25 bips. There was a rumor that it'll be 50, but now I think the consensus is coming closer to 25, and then December again at 25. So basically this year itself, we may look at a 75 bip kind of a cut, which earlier also was expected, but I think that's what the market is discounting. Having said that, obviously, emerging markets as a whole itself should, I think, be a beneficiary, because if there's such a big cut happening there, the money flows normally to emerging markets, which are supposed to be the beneficiaries of rate cuts, and that's normally what happens. And India being where it is today, I think will be a big absorber of this kind of money which flows out. Basically because India, I mean, the other competition used to be, say, China. China is not doing too well on the economic front also. In fact, nowadays, there are question marks even on the data that comes out of China. Nobody is, comfortable with the kind of data that is coming out there. And and then there were these markets of Taiwan and Korea. They have their own geopolitical issues. So that's on the back burner for most. And India being a big market which can absorb big money, I think that's where the flow is.
Okay, so all markets will be beneficiaries, including us. Got that point. Dinshaw, thanks for joining in. Great to have you on. So I was poring over the fact sheets July and August, trying to see what's changed. Actually, not much. It's interesting. You folks continue to show lots of love for the financial services space, right? So I think a lot of the bigger banks are still very much a part of your core holdings. I did note more IT. I think there's been some load up on stocks like Infosys. So just tell us the thought process. I mean, top down, is it banks and IT? Is that what you are looking to stick to, at least for now, and why so?
So should be when the interest rate cycle turns, I mean, whenever the cuts happen, I think for us in India, I think we're starting off with RBI infusing some liquidity back into the system as such. I think RBI has been trying to manage the rupee for a long time, as in the rupee dollar parity as such. And that's why the infusion of liquidity is what we're looking at. If that happens, raising our deposits becomes much more easier. And obviously, the demand for credit has never eased off. I think the banks are being more prudent in controlling the credit growth as such, given their credit deposit ratios are going out of whack. So I think that should be a very big positive for the lenders per se. Having said that, in the BFSI space, there's a very big bunch of non-lenders also. I think that is where the excitement is all about. And when I say non-lenders, I mean the mutual fund space, or you're talking about wealth managers, or the market-related plays like your depositories and stuff like that. I think they're doing phenomenally well in exchanges too. Also, that includes that also. So you are seeing some lot of growth there. And having said that, on IT front, our call was when the numbers for TCS came out. I mean, June numbers for TCS came out. I think it was somewhere in the beginning of July, the second week of July, I believe. And that's when we realized that, look, and by the way, we consider TCS as a bellwether for the IT industry in India. And what we did realize was that with the addition of manpower, things are easing out. Obviously, the undertones, when you did listen to the con call with the management, they were sounding a bit more confident than what they were earlier. So obviously, things look pretty good here. And secondly, what tilted us in favor of IT was that with these kind of stretched valuations across industries, especially in the FMCG space, when markets are at such stretched valuations, normally people believe that FMCG is a hiding place. For us, it wasn't proving to be so, because the growth rates there are not too exciting at all. IT, if things come back to normal, we're looking like at, say, early or mid-teens kind of growth once again. And obviously, the valuations are way below half the valuations of the FMCG companies. So that was a perfect place for us to go and park our money and look at growth happening simultaneously.
Dinshaw, just to go back to that point on the non-lending businesses, and you mentioned wealth managers and capital marketplace, right? The question really there is on valuations. And I could ask you that question even on, on housing finance. Look at the newest kid on the block. I don't know if you can shed some light on maybe not the stock per se, Bajaj Housing, but just the market's whole approach. Because here suddenly the market's willing to sort of deal with top dollar valuations. So again, whether it's something like housing finance and a new franchise that's just come to the market, or it's capital market plays, do valuations still give you comfort there?
No, so basically, you said the right thing. I mean, housing finance is a lender, so that's why I was more referring to the non-lenders. But even in that space, so be right. If you look at the historic valuations, you won't be touching those companies with the barge pole also, in fact. But the fact is that look at the way forward. I mean, I was just looking at some numbers, which were macro numbers as such, and I mean, kind of savings that have gone into. In fact, I was very surprised to see that after demon, in I think it was 15-16, when the financial savings in I think shares and debentures by households was at 20,000 crores, and immediately after demon hit, it shot up to 1,75,000 crores. And there was like I don't know what changed in those couple of months. I think maybe I'll leave that off. I won't speculate also. But the fact is that these guys are the gatekeepers to these kind of savings. And obviously, this is just the beginning. I think the potential in our country is too huge. We've still got a huge population to crack. We just got 14 or 15 odd crore demat accounts. I think that we got a long way to go. So these are the players you want to be with. And given the kind of growth, I think we can live with those valuations.
You know, we were talking about wealth management companies. Dinshaw, there was just an anecdote. I mean, nothing to do with that discussion or adds no value to what we're talking about here. But I was talking to somebody who was setting up a business, a financial business, and he was looking to hire some people at junior levels. And he said, "Well, he told me, he said, I've sworn I won't hire people from wealth management firms because they're just unaffordable." So you were talking about wealth management firms I mean, the stocks have done so well, and the thing is, so there are ESOPs, right, which have gone through the roof. So when you hire, you got to pay, of course. I mean, whatever the cost is, and on top of that, take care of the ESOPs, which of course, have gone up 2x, 3x. So yeah, I mean.
So, Prashant, just to share another anecdote with you, we were looking at hiring some guys around, and obviously one of the wealth management firms employee had come to us. 50% of the bonus was ESOPs. So we said, wow, this is a nice way to give money without giving money. So
yeah, but that could be worth. I mean, I don't know if you did you make the did you make an offer?
I convinced the
guy. Okay, so better prospects with Helios. Got that. What else are you looking at? Anything new you've done recently? Anything?
Prashant,
I was talking with Deepak Shenoy earlier about names like Zaggle and lots of these interesting names here and there, and too much to study and kind of get your head around. And these are kind of new businesses, right, which were not there earlier. Go on.
Definitely. I mean, Prashant, you're right, because this is what we're looking for. I mean, these are the exciting names. I mean, if you've seen my portfolio for August, you've seen quite a few of these platform companies making it into our portfolio as such, and we've been adding to these names. I mean, you can look at the portfolio and you can very well make out which companies I'm referring to. But there are names rather they are platform companies in pharma space, which are doing phenomenally well. So those are the kind of plays we're looking at and the newer ideas that we're looking at. You talked about IPOs. Doing phenomenally well. I think that is the problem with our market, because we've got dearth of ideas. Everybody's seen the valuations, and whenever a new company comes, it just goes to the roof on the IPO front. And I think the FIs also are participating in a big way in that market as such. So these are the basically the platform companies are the ones which are really exciting for us. I think we got 4 or 5 of them in our portfolio.
Yeah, absolutely, you do. I think you have Paytm and I think
First Cry
is something they own, and this is all published. I mean, we're not sort of revealing anything new here, so you can check out for yourself the portfolio at Helios as at the end of August. Dinshaw, great conversation as always. Thank you very much for joining us. Appreciate it, and thank you till the next time we speak. Well, I think we got the market up 40, so 25,423, 424 is where we're at. We'll take another quick break here. I'll just leave you with a quick note. India's business news leader is now a click away, introducing CNBC-TV18's all-new Android app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 Android app now from the Google Play Store. We'll take that break. We'll see you on the other side.
Welcome back. So, as usual, it is time for D Street Chatter. Nimesh is joining in with the insights as always. Nimesh, so more quiet day on the screen today. What have you picked up?
Well, sir, you know, I should say another quiet day, right? I mean, it's been pretty much flat for the last couple of days. I guess, you know, the market is waiting for a decisive move on either side. I've been talking to a lot of, participants, and generally the sense is quite mixed. There are a lot who believe that there could be a very sharp fall, and there are some who believe that, you know, you'll see a big breakout on the upside. So I guess, you know, one big trend will emerge post the Fed outcome, which we will react to on Thursday. So I think that's what market is waiting for. From a flow perspective, again, you know, it's a very quiet day. Flows are quite muted as well. There is a small MOC basket, is what I understand, at a leading FIDs, but it's very small and some very select names. So that's the trend. On the broader markets, the index may look flat to negative, but there are a lot of individual names which are buzzing in trade today. And surprisingly, there's been big moves on all the stocks where there were upgrades today, right? So whether it's the IGL, MGLs of the world, or for that matter, Bajaj Finance, all are buzzing and on good volumes as well. So I guess that pocket has done well in the broader markets today. Again, you know, it's been quite mixed. So there is no particular sector which is leading the way today, and that seems to be the trend. And it's likely for at least till the Fed outcome. So that's the overall feedback. But I guess market is poised for a big move, and yet to decide on which way the markets are going to move.
Yeah, let's see. I think we'll probably have that clarity come Thursday morning our time, and then the market will take it from there. What about individual names and stocks? Anything exciting today, Nimesh?
Well, you know, a lot of stocks are buzzing. In fact, there are a lot of blocks which have happened in today's trade. There was Tata Motors, there were a couple of other large blocks as well. The first stock on my list is Welspun Living. There's a large block, almost 50-60 lakh shares got changed hands. And I understand it's a clean out from a hedge fund who participated in the last block when the promoter sold. And I guess one offshore fund was a buyer in today's block. So maybe the disclosures would be quite interesting in Welspun Living today. The second name is Dixon Tech. Big move in that name. In fact, yesterday the stock was up 8%. Even today the stock is sharply recovered from the intraday lows, and there is genuine buying interest from larger FIs, is what I understand. But equally, there is a sense that maybe a large block is around the corner, and you might say a large block coming in Dixon Technologies very soon. So that's something to track there. The third name is EPAC Durables. Again, a small cap stock, but big move on that name. This month the stock is up almost 50%. Even today is buzzing. Large volumes as well from larger HNIs. And the street is in generally anticipating a large order win for the company, and that explains a big move in the last 1 month in that particular name. In the last is Bajaj Holding Finance, locked at 10% upper circuit after a big up move on the first day of the listing. And for the last 2 days since the listing, one large long-only fund shifted to an aggressive buyer. Even today, there were large buy flows, and hence stock is locked at 10% upper circuit.
All right, Nimish, thank you very much for that. So interesting list as always on D Street Chatter. We'll take a break. Mitesh, I think, is with us right now to take us through some trading ideas. Mitesh, good afternoon again. Thanks very much. What do you have on your list?
So, Prashant, a very quiet day actually, after all the mild choppiness. I would suggest a STBT on Dalmia Bharat with a stop at about 1840 for targets of 1800 or below. And a BTST in Cummins with a stop at about 38.25 for targets of 38.90.
Okay, Mitesh, thanks very much for getting us all the trades today. Well, with that, let's move on now and focus on Tata Power. From the sidelines of the 4th Global Renewable Energy Investors Meet, our colleague Abhimanyu Sharma caught up with Praveer Sinha, the company's CEO, and got an update on the facilities that Tata Power is setting up with respect to the solar module chain, solar module, solar cell, the new facility that's come up in Tamil Nadu. Take a look.
We have been manufacturing 4.3 gigawatt of solar modules in our plant in Tamil Nadu. This is Gangai Kondam near Tuticorin. And this plant has been operating for last nearly 1 year and is operating at full capacity. In the 4.3 cell plant, we started the manufacturing of cell, and the first 2 gigawatt has got operational. We expect this plant to get fully operational, the balance 2.3 in next 4 to 6 weeks time. So we expect that by end October the plant will be fully operational, and we expect the plant to stabilize within this calendar year. So I think all in all it's very good. This adds to our nearly 600 megawatt of solar cell and module plant in Bangalore. So we will nearly be 4.9 gigawatt of solar cell and 4.9 of solar module.
Sir, do you intend to restart the third-party solar EPC? What are your ambitions in this sector?
Well, we are again one of the biggest players in third-party EPC. We are executing large number of projects this year. Some of them are using DCR modules, that means Indian cell and modules. And some of them are, of course, the normal ALMM modules. So I think we will continue to play a very big role in that. As far as EPC is concerned, we do both for our own projects. We set up our own utility scale projects. We also set up for third party, some of the public sector and private sector. So I think we're doing very good in that.
Is there any update on the Mundra long-term PPA, and also what are your short to medium-term goals in the entire sector?
Yeah, I think Mundra continues to operate under Section 11, and it is one of the cost-efficient plants which gets scheduled fully. And we do expect that we will be able to suitably resolve it quickly with the concerned state governments. We are in constant discussion, so we should be able to find an amicable solution.
My final question to you, with respect to climate financing, there are several challenges which are still being faced by several players in this domain, despite efforts made by the government, both the centre and the state. Do you feel the announcement of the investment commitment and plans from the government side, some problems are going to be alleviated, and what further action can be taken on the policy end by the governments?
So I think the government has been very supportive, and that is the reason today we have nearly 200 gigawatt of non-carbon generation, and reaching 500 in next 6 years is a very challenging task. But I think all the developers as well as the government, the policy makers, the regulatory system, all of them are supporting, because this is one area that everyone is on the same page, and everyone understands that climate change is inevitable and we need to take the right actions. And I think India is in the forefront of this, and we should all feel very charged and energized to make this happen.
Okay, well, that's the Tata Power management talking about the renewables business there. We'll take a break. Jay Bala from cashthechaos.com is going to be with us on the other side, and we talk market technicals levels. Stay with us.
Welcome back. Well, still keeping a track on the market. But before we carry on, here's a word from Finance Minister Nirmala Sitharaman. Now, the FM has responded to the controversy surrounding SEBI chief Madhuri Bhuj for the first time. She said that the SEBI chief and her husband have been answering the charges made by the Congress party with facts, and those facts must be taken on board. The Congress party has made conflict of interest allegations against the SEBI chief. She has denied all of these allegations so far. Take a look.
Finance Minister, Ms. Madhuri Bhuj was one of the rare pedigreed professionals from the private sector who got drafted into the government, into this regulatory role as SEBI chairman. What is your assessment of the situation involving Madhuri Bhuj?
Well, I think quite a few of the allegations are being answered by her and by her husband, I think also. Yes. Both of them together are defending themselves and putting out facts to contradict those which are being alleged by the Congress party. So I think the facts will have to be taken on board.
And are you satisfied with her answers?
Well, I'm not here to judge that.
Okay, well, sort of just a factual kind of a retort to the question on the SEBI chief. Well, let's bring in Jay Bala now, who's with us of Cash the Chaos. Jay, good to have you with us here. Thanks for your time. The big question, of course, is what happens after the cut tomorrow. and should we expect some big market moves around it very near term? Or you think it's just going to be business as usual?
Yeah, definitely there's bound to be a big move, Prashant. And if you look at the Nifty, it's looking quite tired and looking for a trigger either on the upside or the lower side. And as I've been pointing out for the last 3 weeks, as long as the Nifty can hold about 24,770 to 24,753, I think the bulls are safe. But if markets were to fall below 24,753, I think it could trigger a sizable pullback in the short term. It can be a trend reversal too, but it needs a lot of other evaluation to be done. So we'll take it as a pullback that's due if the markets were to go below 24,770.
Okay, so a slip to 24,770, you're saying that is not entirely ruled out just yet. But what's the sense? I mean, just another day to go and then we'll have the Fed announcement coming in. And if it goes along expected lines, that the cut is coming, do you expect any meaningful moves? And how are you positioning for the event, Jay? Whether it's 50 bips or 25 bips, whichever way it goes.
Yeah, on the bond markets, I'm anticipating the US 10-year yields to drop to about 340, 320. That's been the view since quite some time now. And the markets are quite precariously poised. The big techs are underperforming. And if the NY FANG index, if that were to drop below 10,400, that will be a big dent on the bullish triggers for the market. So we are a bit cautious on the markets. So, but we've been anticipating higher highs for the Dow Jones and underperformance for the big techs. That's been playing out. But even the Dow Jones is looking like it could finish a move. But like I said 3-4 weeks ago, I'm anticipating big volatility to come in for the markets from for the next 6 months to next 18 months. So once the next cut is done, we can anticipate some huge moves. And there are a lot of templates that's due. The Nikkei, the US dollar JPY, and there are so many similarities to 2008. So that we just need the market to do something. The next step is going to be very crucial. And if that were to happen, I'll spell out the template that was there in 2008. It's a bit premature to talk about it, but for the next Tuesday, we can probably talk about it.
I'm not sure if it's correct, but I think somebody sent me a note saying this is from Merrill. We'll confirm it. Saying that they were describing the US market. This is not a bull market, but a buffalo market. It's lacking in direction. It is tired and it is roaming.
Like a buffalo.
It's just, but that was for the US to be sure. But as I said, we'll confirm it whether that actually indeed is something which BofA has put out. Jay, it's dollar, right? I mean, what do you make of it? I think we're around the 100 levels, 100.5 or so. And this range, 100.4 to about 100.8, is the 200 weekly moving average, the December 2023 lows, the Feb March 2023 lows. You break this is a big level. You break this, I mean, there can be pronounced losses from here. That typically has meant emerging market outperformance.
Yeah. But the markets have anticipated that, and that's the reason why we're seeing outperformance for the Nifty. And structurally, the dollar index has had two possibilities. One, it stays above that 99 and change the low it made in 2023 and turns from here. And the next objective is about 97. So there's no edge between these two views. So if the 99 and 99.6 or 99.7, if that were given, we are looking at something like 97 for the dollar index. But there's a surprise possibility, as I mentioned on the 20th of August, that the dollar USD JPY cross has a unfinished strengthening to be done around 140. It's done 140. That looks like a completed move. So if that were to USD JPY were to strengthen, that will probably give strength to the dollar index on the $6 basket. So watch out for this. We are at the important support. If the current lows were given, we are looking at 97 for the dollar index.
97 for the dollar index. Okay, so some big moves perhaps expected. So, Jay, finally, I mean, till we get more clarity on what's happening with the global markets, any immediate clear trades that you see on the way up or down here in India for, in terms of individual stocks?
Yeah, I've gone to recent IPOs, relatively recent, listed in 2021, 2022. One is from the healthcare space, Nureka Limited. It's breaking out of an inverse head and shoulders pattern after running up initially, and it looks like it can do about 470, and a stop loss of 320 is good. And there's another stock called Nuvoca Vistas, again recently listed in 2021-22. So it's breaking out of a short-term trend line. And once again, the stop loss for this also is at 320, but the potential is about 475.
Okay, Nureka and Nuvoco. Got it. We'll keep those in mind, Jay. Thanks very much for being with us this afternoon and for taking us through the way the market setup is poised at the moment. Well, we're down to the last minute and a half of today's trading action. It's been a really, really quiet, range-bound day. But the headline is the mid-cap market has underperformed. The Nifty's been okay, just a 25-point up move. But the mid-cap index is going to end with a small cut with a very negative advance decline ratio, about 960 stocks advancing, but over 1,400, almost 1,500 stocks on the declining side. Anyway, talking about the large cap trends, the two-wheeler makers, Hero and Bajaj, had a good run. Those were the stocks that were in leadership position. Bharti Airtel, NTPC, Mahindra and Mahindra. These are some of the other gainers. L&T, Britannia and ONGC. Some more green here, and then it starts thinning out. On the downside, Eicher Motor, by the way, did not participate in that two-wheeler ride. It was just the other twins, Hero and Bajaj. Eicher has had a negative day. Tata Motors has ended lower. Some selling on JSW Steel, BPCL, Grasim. So basically, trends hard to define. Even sectoral trends really hard to define on a day like today.
No, absolutely. And it's a little bit of that, a little bit of this, but no real, thrust anywhere in big time. Of course, I mean, there are always individual stocks which will be up. There'll be many 10% movers, and we had our share today as well. But otherwise, it's a bit of a slow day and just a drifty kind of a day, but we went up. Nifty Bank ends actually 2.5 odd points lower, so almost unchanged at about 52,150 or so. Even sectorally, nothing really, which was up or down in a pronounced way.
But since you mentioned those big movers, shouldn't take those names as we're signing off. Bajaj Housing, once again, 10% on that stock. Ola Electric, 10% once again. Century Ply, 11%. Mrs. Bector's Foods, 8.5%. And let's not forget today's listing. Big day for P.N. Gadgil. Starts off in style with a 65% kind of an up move. And let's watch for the chemical space. A lot of chemical stocks have had, big moves today. Himadri Chemicals, whether you're talking about Sudarshan Chemicals, Neogen Chemicals. Let's see if there's any follow through tomorrow or not. But some of these chemical stocks definitely finding favor with the bulls. Well, with that, the bell has gone. The day has come to a close. Nifty with a 23-point gain. On that note,